Welcome to Markets Now. I'm Michelle. We're with Brian Grete, editor of Pro Farmer, and we had a lower day in the livestock mixed in the grains. And Brian, let's unpack this. First of all, soybeans did see some pretty significant pressure to start the week. We did have South American rains over the weekend, but did the NOPA crush figure also pressure the market?
Absolutely. I think it was a combination of both, Michelle. We're seeing that production in Brazil record large, but now moving into the 170, 172 million ton range for most of the private estimates. So not only a record, but really big. And from a concern standpoint, there aren't too many out there right now after the recent rains. So it looks like that is just charging ahead. And unless we develop some sort of concern from a crop perspective, it's going to be really difficult, I think, to attract buyers to the soybean market. You mentioned the NOPA. It was a record for November, but came in below expectations, and so just didn't hit the analyst target, so to speak, and that added to the price pressure in soybeans as we finished up the day on Monday.
So, Brian, if we get into the first of the year and this South American crop is confirmed, is it just destiny that we're going to take out these contract lows in soybeans?
Well, I think that it's going to matter on the money flow. The corn pull the soybeans off the lows? Do soybeans continue lower and pull the corn market down? My personal belief is I don't see a lot of downside risk in soybeans. I think that they're relatively cheap where they're at right now. But boy, if you get into a money flow situation and you make new lows, it's really hard to tell if just how much pressure the funds can put on the marketplace.
Do you think the tariff fears are all factored in or priced in yet?
Well, I think that's a large part of it, to be honest with you. We know that tariffs are coming. At least that's what President-elect Trump has promised. And if we know anything about him, that one, he's a wild card, but two, that he usually carries through on his promises to those degrees. So I do think the market is pricing in a worst case scenario. Now, if things aren't as bad as what some fear when we get to past January 20th, then you may see a relief rally in soybeans. But I don't know if I'd bet on that just because of the South American production in particular in Brazil.
Gotcha. So corn went the opposite direction of soybeans. So are the funds just in there buying, kind of pushing that long position they've established?
Yeah, absolutely. And USDA helped that cause by cutting ending stocks by 200 million bushels. So now we're just north of 1.7 billion bushels, well down from what it was projected at one point in time. And we're on the cusp of getting to borderline tight if we continue to push demand to the upside and tighten up those ending stocks. And so I think corn has a fundamental reason to be strong here. My biggest concern on corn is that it just can't get over these technical levels that need to be cleared, specifically the October high, and continue higher before the soybean market pulls it down.
Yeah, you've got that. And I think the 200-day moving average kind of coinciding there. What would it take to get above that level? Will the funds continue to try to push through there, or will we need a catalyst like a South American weather problem or something?
Well, actually, a push above those technical levels could be the catalyst to attract more fund buying. And so I think it's a combination of both. It's money flow, but it's also technicals and then some fundamentals if they come into play. Now, interestingly enough, I think because of the devaluation in the Brazilian real, record lows versus the dollar, we're probably going to get more safrinha corn acres down in Brazil than what was once anticipated. And so we still may be down from a year ago in terms of total acreage, but not as much as what was once anticipated.
And we have been seeing corn and soybeans being spread against each other. How long do you anticipate that'll happen? What wins out? Does corn eventually pull beans, or do beans anchor corn down the other direction?
Yeah, that's the ultimate question there. I don't know the actual answer to that, and no one does. But that's quite a tug of war that's going on right now, and one probably will eventually win out. And if not, we're just going to be into a choppy sideways pattern for an extended period of time. And you can see that with corn being choppy sideways with a firmer tone, and soybeans being choppy sideways with a lower tone. So that it's possible that could continue as we move into the new year. But my expectation or suspicion is that we will see one of those two win out.
So is wheat trying to follow corn right now, or where's it going?
Wheat's kind of caught in the middle.
Okay.
The fundamentals aren't super poor. They aren't great. The funds aren't nearly as interested in buying wheat as what they are in the corn market. They aren't as interested in selling wheat as they are in soybeans. And so you got wheat just kind of caught in the middle and treading water, so to speak.
Will we start trading at some point some of these global concerns, especially with Russia and their tight crop, or not?
Yeah, that one's going to be an interesting one. So as we get into the second half of the marketing year for 24-25, we're going to see the Russian wheat shipments slow down really significantly. And so the big question is, does that drive some demand to the United States? Because let's be honest, export demand is the primary factor that traders pay attention to. And while we've seen some improvement, we haven't seen the type of improvement needed to be price supportive on a sustained basis.
Let's move over to livestock. The cattle market set back here today. Live cattle, I think, nearby's made new highs for the move before we reversed. So are the funds in there taking some profits with this big long that they have?
Yeah, absolutely rough price action to start the week. Like you mentioned, we started out firmer on support from last week's cash trade, up for a fourth straight week and up more than $3 on the week. And so just supportive from a fundamental standpoint. But boy, we ran out of buyer interest around mid morning and then reversed lower, ended with a bearish reversal on the day and triggered some profit taking, fund liquidation, those types of things. Funds, interestingly enough, are the third longest that they've ever been in live cattle futures. And so if we do extend to the downside here after Monday's bearish reversals, then you could see more active liquidation pressure and put more near-term price pressure on the market.
Yeah. Plus, you're going into the end of the year and you got a cattle on feed report coming. So there's some more reasons for them maybe to liquidate.
Absolutely. So this is the last full slaughter week of the year. The next two after that being Christmas week and New Year's week, then become shortened. And so the packer doesn't need to be as aggressive with their cash bids because they won't need as many supplies. And I think that, just from that perspective, we'll probably put in a short-term top in the cash market. If we see follow through to Monday's heavy losses in the futures, then I think that would cement lower cash prices. But the cattle market's been very resilient, so I think this is going to be a critical one. We've seen buyers show up underneath the market, and we've seen the packer be more aggressive with the cash bids than what was anticipated.
Yeah, absolutely. And that's kind of been the case in the feeder market because of the tight supplies and the strong cash trade as well. But what's your sense now about the market and how it's going to handle the reopening of the border?
Yeah, so the reopening of the border, there was some talk late last week, some reports, wire service, that maybe that we would see some trade by the end of this year. It doesn't look likely. USDA put out a statement late Friday that said that early 2025. So there's just a lot of protocols that have to be cleared before they can reopen the border. And we want that, to be honest with you, because we don't want the new world screwworm to enter the United States by any means. So we want to make sure everything is up to specifics and that we're covering all our bases before we reopen the border. And so it sounds like that'll be the case. Now, Friday's cattle on feed report, the ban went into place in late November, November 22nd. And so we'll see a little bit of an impact on the feeders with the placements number, but the bigger impact will come in January with the December numbers on the placement side of things, because that's when the Mexican border was fully shut off.
Yeah, and we import a lot of feeder cattle from Mexico on a monthly basis, don't we, Brian?
Absolutely, and even more so now because of the tight calf supply situation here in the United States. So this is from a short-term perspective, it is pretty big. From a longer-term perspective, if the border does open in early 2025, as USDA indicates, then it's probably not that big a deal. We're talking about like a 5-6 week period that was shut off. It'll be exaggerated a little bit by the fact that the supplies are so tight here in the United States. But all that said, if you get those cattle moving back across the border, it should even things out relatively quickly in early 2025.
Right. Speaking of the funds, they were record long in the hogs last week. They've exited a few of those positions. Do you think we're going to continue to see them take money off the table there as well?
Well, I think the interesting thing is that December hogs go off the board. February held a premium to the cash index, and that was fully wiped out on Monday. And so the trader basically said, "Hey, we don't want to trade with a premium structure in February futures," and it's a clear indication that they're not really certain on what the cash index will do. It's kind of the cash index has had a couple days up here recently, but still hasn't put in a seasonal low, and so we're going to watch that one pretty closely, and I think that the February futures will track that one pretty closely. But with that said, if we do get some liquidation pressure, which is a real possibility, you can see that February contract move to a discount to the cash index pretty quickly.
It'll also be interesting next Monday to see in the hogs and pigs report if USDA does any revisions to supply looking back, don't you think?
Well, in September, the slaughter numbers that were implied with the market hog inventories were quite a bit heavier than what they've turned out to be through this final quarter of 2024. And so we do anticipate that there will be some revisions. It looks like USDA overcounted the market hog inventories in the September hogs and pigs report, which would mean that there will be some downward revisions this month.
Yeah, I know you've talked about that before, so we'll keep an eye on that. Brian Grete with Pro Farmer, that is Markets Now.